Hey everyone, big news this week. The Bank of Canada just dropped interest rates again, and the new data is showing where Vancouver home prices could be headed next. I'm going to talk about what it means for buyers, sellers, and investors. So, this week, the Bank of Canada cut its key interest rate by 0.25%, bringing it down to 2.25%. And that's the second consecutive cut. Now, the reason the economy is slowing, inflation has cooled to around 2.4%, and business confidence has dipped due to trade and geopolitical challenges in the environment right now. So the banks say this might be the right level of cuts for now, unless the economy weakens further. So what does this really mean for you? Well, if you have a variable rate mortgage, your payments could go down. And if you're on a fix, things won't change overnight, but lenders are starting to offer more competitive rates as the market adjusts. I spoke with my mortgage brokers this week, and some lenders are offering rates as low as 3.6% right now that they've seen. So overall borrowing just got cheaper, which can help boost buyer confidence and affordability. But here's the twist. While rates are dropping, so are prices. According to a fall 2025 report on housing, the average detached home price in Greater Vancouver is now around $2.48 million. And that's down from $2.65 million early this year. That's roughly 6% so far, with prices possibly falling up to 15% by the end of the year. The report also says that Vancouver has seen a 19% jump in listings, meaning more homes on the market, more options for buyers, is still consistent with the trend that I've seen this year. But many sellers are still pricing homes holding onto the 2024 prices, which are slowing sales. But right now, we're in a buyer's market with actual locals driving the activity. But here's the interesting part, and it's a bit of the loop. Conditions are improving for buyers, but expectations of even lower rates and rising inventory are causing many to hold off to wait for further dips. I've seen homes that were selling for over $1 million last year now going for around 800,000. Now, if you're a buyer, this is the window you've been waiting for lower rates and more listings mean even more negotiating power. Now, if you're a seller, it's time to adjust your strategy. Pricing realistically and presenting your home and marketing it effectively will make all the difference. Now, for investors, this could be a short-term soft patch, but cheaper borrowing and steady rental demand could make up the numbers work again, especially for long-term holds. Now, the Bank of Canada's goal is to support the economy without reigniting inflation. The combination of rate cuts, price drops, is reshaping the real estate landscape, creating a very balanced market more than we've seen in years. Now, over the next 6 to 12 months, expect steady demand from real buyers who've been waiting for affordability to improve and smart investors taking advantage while others stay on the sideline. So to close, rates are falling, listings are climbing, and prices are adjusting, which means opportunity is back on the table. Now, if you're looking to buy or sell in the next year, feel free to reach out and I can give you the best plan to take advantage of the market. Thanks for watching. See you next time.